Hi, it's Sean Havens with the Benefit Haven, and I wanted to now go into the different kind of dissecting the different types of policies. If you missed our last video on the different types of life insurance policies, make sure you go back and watch that. We're going to go into the term policy itself and really kind of break that down a little more so that you can kind of understand maybe the different types of term policies and how it works really. So before we go into that, guys, make sure you're subscribing to the channel so that you're getting all the content coming out. We're really trying to help you be successful with more knowledge and good sales, best sales practices, and really just convert a lot more of those appointments that you have into sales and make more money so that at the end of the day, at the end of the year, you're making the kind of money you set out in this business to make. So that's our passion. A lot of agents failing. 90% of agents fail in this business. So our passion at the Benefit Haven is to make sure that we change that, okay, to really expand that 90% failure rate, and or less than that, I should say, and so where more agents can be successful in this business. So going into term here. So the purpose. What is the purpose of a term policy? So if you're talking to one of your prospects and they're telling you that it's important for them to to take care of their kids until at least they're 18, right? They may want to leave something for them after 18, but it'll be devastating for if there's a husband and wife that has a young family and something happens to one of them. It's devastating, right? So even if the wife were to pass first, then the husband has to still take care of the kids. So there needs to be money set aside to make sure that that happens. And so even though maybe the wife may not be working, there needs to be some income coming in for the husband to make sure that they're taking care of the kids and maybe the house and things like that. So these are really important. Personally for myself, I have a lot of life insurance for my spouse. I have 5 kids myself, so I have to make sure that I maximize the amount of insurance I have. Right. So term policy is how to do it, and I can take care of my mortgage. I can make sure my wife is taken care of. You can also do it for businesses, right? So if somebody has a business and maybe there's a partnership, then you can use term policies to help maybe a 10 or 15-year policy to help offset if somebody were to pass. Then you would have income to continue the business and it doesn't just flop. So, or to get another key person or key employee or managing the business, get them in there and pay them for their work. So anyway, so those are different purposes for term policies. There's a lot of them. Maybe somebody wants to, they don't have a lot of money, but they want to leave something to a loved one, a parent, a child, or a nephew, charity, things like that. So this is really designed to have the insurance and pay a lower amount for the insurance, but maximize the amount of death benefit you're getting. So there's not going to be any cash value build up in these policies, but you can put like a return of premium on there. You can put different riders on term policies to beef them up a little bit. If you want to have them spend the extra money, or if they want to spend the extra money doing it. Okay, and then if they don't use it, because that's a lot of the term thing, right? If you have it for 10 years and you don't use it, then what? You just paid in all this money for nothing. Well, it's not for nothing. They have peace of mind, which is really important to have. I love the peace of mind knowing my family's going to be taken care of. Hey, I don't want to pass away, but if I do, then I know at least my wife and kids are taken care of financially, right? So that's really the purpose. It's not a cash value policy, so understand that's going to be the main difference between a term policy, maybe a whole life or an IUL, is that this is not going to build up any cash value at the end of the expiration. It's pretty much going to go up at their new age. They're guaranteed to be renewed, but it's going to keep going up. The premium is going to keep going up on them. So those are some reasons why you would want to have that. Again, I think that it's good to split it. If you have, let's say, $100 in premium to work with, maybe you do $50 or $60 worth of term, and then you do the other worth of IUL or GUL or whole life or something like that. So they do have a permanent policy, because there's still going to be need for insurance after their kids are grown up, right? After their kids are 18 and out of the house, they still want insurance for their spouse. And maybe a legacy for their kids. So you want to make sure that they know that hey, what's going to happen, or what is your plan afterwards? Let's plan ahead a little bit so that the insurance just doesn't go away at that time, because now they're 20 years older and it's a lot harder to qualify as we get older, right? So so let's go through them. So we have annual renewable term, 5-year, 10-year, 20-year, 30, 40, 30, 40-year, and 2-age blank. So you can do all these different types of policies, and again, depending on the fact finder, depending on what they're looking for, you're going to basically do the term. That's why there's different terms that you can choose, depending on the situation that they're in. So if you want to make sure that a mortgage is taken care of and you have a 30-year mortgage, you may want to do that. You can do decreasing term, you can do different things like that so that it goes down with the mortgage. So if you want to do, I got a 20-year policy when my last child was born, so that I can make sure that I have insurance for until they're 20, okay, or until at least they're 18 and they can take care of themselves. So those are the different reasons for that. To age. So let's say somebody wants to have a term policy to age 65 when they retire. So you can do a term policy to age 65, and that'll take them all the way through retirement when they're working. So it can offset their income. Again, you're going to need to have something for them when they're after 65, because it's probably going to be way too expensive to continue this term after that, and they're going to, even if they continue the next 5 years, if they live past 70, now they're paying this huge premium, and they have no insurance because they can't afford it, right? Because they went from earned income to now their Social Security and pension, which is usually less than their earned income. So again, you want to make sure that you have it designed whatever their purpose is, whatever their situation is, and then we can kind of design that around them. So 10-year term, let's just say, for example, they get a 10-year term. What does that mean? A 10-year term guarantees their health, it guarantees their death benefit, and the premium for 10 years. That's what these terms are for. Okay, so that's what it is. I know that's elementary, it's fundamental, but for some of you, you need to know that. Okay, and it's important that we understand that's what these terms do. Is the 10 years is specifically for 10 years, guaranteeing all of those things. Okay, so that's really how it works. Term policies are pretty simple. They're the easiest to understand and to get. If you're looking at actual policies that somebody has, and let's say they're about to expire, maybe in 2 years or so, you can kind of start planning ahead. Hey, what's going to happen in 2 years when your policy expires? Do you have a plan? What do you want to have? Does that concern you that you're not going to have any insurance after that, or that it's going to start going up? Okay, so you really want to ask them those questions, and this is all about making sure that we're providing value and a benefit to our clients. So we do that by asking questions and knowing how policies work and the purpose of why they're getting those policies and what they want in the future. Okay, so that's just a brief synopsis of term policies. Again, I will go through an actual application, go through iPipeline, show you some of the companies to go through when it comes to term. Hopefully, you're not just captive, and you can use different companies, because different ages, different male, female, different tobacco, non-tobacco, preferred, standard. All these different companies have different products, specialty products for these term policies. So depending on your situation, you may need to go one company or the other. So that's why I'm going to go through an iPipeline where it does quoting. You can go right to the application from iPipeline. Okay, and I'll do that in our membership program. So make sure that you're signing up for that, so you can watch me walk through the whole thing live.